Eric, today is part 4 of our 5-part series on the key pillars of any great early founder pitch. To review, those 5 pillars are team, problem, solution, market, and traction. Today we're covering market, but we kind of already talked about market in episode 24, Why Isn't My Business Venture Backable?
Oh crap, you're right. This is such a lazy episode that we're making right now, Janel. But there's more to talk about. Founders, definitely check out episode 24. But for today's episode, let's talk a little bit more about 2 concepts that VCs really care about when it comes to a great founder pitch: total addressable market and serviceable addressable market.
Okay, founders, we really want you to be able to nail your response when a VC asks about your TAM or SAM. TAM is pretty simple to understand. What is the total opportunity size of the market you're trying to serve? For example, if you're creating a ride-sharing app to compete against Uber, how would you describe the dollar amount of the total market opportunity for your company?
The best way to answer TAM simply and quickly for an investor is generally to lean into third-party data. In the case of the ride-sharing company example that Janel just shared, maybe you lean into the investor reports from Uber and see how they define their own TAM. Or perhaps there is data from a research firm like Gartner where you can describe TAM.
So what are you actually looking for when it comes to TAM?
Well, it's super simple. It's got to be huge. TAM must be measured in the billions of dollars, ideally tens of billions of dollars or more.
That's right. A large TAM indicates that your startup, if everything goes right, could IPO or get acquired for billions of dollars, which can produce high returns for not just the founders, but also the VCs.
That's absolutely correct, Janel. So with TAM, the founders need to understand what their number is if they can get 100% penetration in the market that's trying to serve and can capture all of those dollars. That's that basic concept. And again, this number has to be really large because this is important to understand. Venture capital is not about small exits or returning 2x or 10x on our investment. At the early stage where groups like Hustle Fund invest, we want to see 50x or 100x or more outcomes on their investment. And a large market is a necessary component to fulfill that hope.
Okay, so let's talk about SAM, serviceable addressable market. What the heck is that?
Serviceable addressable market is first and foremost a mouthful to say. So let's just call it SAM. SAM talks about the portion of the TAM that the business can actually reach and serve.
So let's build on what Eric just shared. Here's an example. I'm starting a ride-sharing company, but let's say I only want to serve Canada. So while a bold founder might claim that the TAM is 8 billion people on this planet who want their rideshare service, there are only about 40 million people in Canada. So you can imagine that the market size is substantially less.
So long as the SAM is still large enough, measured in the multiple billions, that's okay. And a lot of times great companies start by addressing a very local SAM and then using that as the foothold to grow into a larger SAM, slowly edging towards the full TAM.
So I might want to start my rideshare company in Canada, but then over time I might expand into the US market, then the Latin American market, and so on.
I really like what Janel described in terms of thinking of SAM as concentric circles, start in a local area to test and validate and keep growing and growing into those larger markets. And then eventually, as we've mentioned, hopefully get a little bit closer to that massive TAM market size.
We've defined 2 concepts in today's Uncapped Notes episode: total addressable market, also known as TAM, and serviceable addressable market, also known as SAM. A good founder pitch should be able to explain where their company sits with these market concepts.
The only takeaway founders need from today's episode is that these SAM and TAM numbers need to be large. Check out episode 24, which explores this a little bit further. But VCs are swinging hard for huge outcomes, and a large market has to be there to make huge outcomes happen.
Stay tuned. The last part of our 5-part series is coming up, where we will be talking about Pillar 5, traction.
Oh yeah, and don't forget to like and subscribe to Uncapped Notes.